crypto is pumping, as well as the general market. We've got some news to go over, and right now it's the talk of the town, Silicon Valley Bank. I'm going to give you my thoughts on what's going on, my thoughts on why the market's rallying, and also why Bitcoin's doing so well today. So first off, you'll see here that most of the banks are tanking. People don't want their money locked up with the banks if more and more fail. Even if the government does continue to bail them out, make uninsured folks whole, people still don't want to touch that. People don't want to be tied up and waiting to get some money back if things do get worse, if things do fail. But you'll notice in general, the market's been pumping on this news regarding the banks. And this is, in my eyes, speculation that the Fed won't be raising rates as aggressively as previously thought. And besides that, it's also reassurance that, the Fed is starting to break things, and as they break things, they're going to go and fix them, which is kind of breathing a sigh of relief into the market, seeing that, oh, the Fed will push us along, the Fed will have our back. And I think that is somewhat dangerous thinking, because in my eyes, the Fed will still be raising rates at least a few more times, but maybe our end goal won't be, 6-7% or something like that. Maybe we're only a few 25 basis points away. And I think the market is suspecting this as well. And as I said, the market's also thinking, if something breaks, the Fed will be there to save it. But check this out. I'll leave this article down below for you. But in an extraordinary action to restore confidence in America's banking system, the Biden administration on Sunday guaranteed that customers of the failed Silicon Valley Bank will have access to all their funds, all their money, starting Monday. In a related action, the government shut down Signature Bank, a regional bank that was teetering on the brink of collapse in recent days. Signature's customers will receive a similar deal, ensuring that even uninsured deposits will be returned to them Monday. And this is the government trying to, stop fears of bank runs. And one thing that's very big is these banks aren't required to even hold our money. So I think that's why they're so quick to just step in and try to say, hey, things are going to be all right. You don't have to run and go get your money from these banks. We'll be there just in case, to be sure that you have all your money that you put in. And I think that's what they're trying to do. They're trying to keep people, obviously, from a bank run, because I don't think the banks have nearly enough money to cover it. And if the tide goes out, so to speak, we will see that these banks have been swimming naked, meaning that if times get tougher, we're going to see that more and more of these banks can't actually provide the liquidity that its customers need on a bank run. If one were to happen, the Fed is trying to make sure that that doesn't happen, but I think that's very interesting. And I think this kind of thinking may be why Bitcoin has been running lately. First off, it's anti-inflationary. As we know, when there's more and more bailouts, it's also possible that we're going to see more and more money printing. But I did want to bring one more part up to this article, which is kind of what I was just saying. By guaranteeing the deposits, the US government is trying to avoid two potentially risky scenarios from the bank failure fallout, both of which could have dire consequences. Other banks with similar profiles to SVB and Signature could be next to fail if customers lose faith that they will have ample cash to fund their deposits. And the tech companies that kept their cash with SVB could collapse if they were unable to make payroll and fund their operations with the $250,000 of FDIC insurance. So that's a whole nother thing that could collapse. People could lose jobs on a lot of these startups. These startups can obviously go under if they don't have the funding they need to survive, as many of them are not profitable. But let me know, guys, what you think of what's going on lately. I think the market is taking this as the Fed may not raise rates to the full extent that we thought. And also, if things do get bad, the Fed's there to just help us along and keep us pushing, keep us moving on up, which I think is a pretty dangerous way to think, but I can see why the market is rallying. It's kind of reassurance that, oh, we'll be all right. The Fed is starting to break things here with these rates. And this is one thing that the Fed actually said in a previous meeting is we have yet to see the effects of these rate hikes that we have already done. And I do personally think it takes some time for these effects to be felt. It takes some time for those people with, very high interest rates to finally buckle and not be able to afford it. The credit card debt can only run up for so long. The insane prices on gas, on everything else, can only go for so long until the consumer says enough is enough. I'm not going on the next vacation. We're going to eat in more often. Things like that. I do personally think it'll get a little bit worse before it gets better. We still have a far way to drop, in my opinion, for the housing market. We have a lot more unemployment coming in terms of jobs. We definitely need to see higher unemployment. But I do think the pieces are starting to fit into the puzzle. I do think the Fed is not going to raise rates as much as people anticipated. But let's cap off this video and see what crypto's doing, Bitcoin specifically. And would you look at that? We've got Bitcoin absolutely popping from being roughly $20,000 on the 11th to popping up all the way to nearly 24,500 on the 13th here. This is absolutely insane. I think people are exiting the banks. People are finding another place to maybe store their money. We also have the next halving cycle in play. And we also have, in my opinion, pretty bullish charts. We did see a golden cross on Bitcoin back here at the 7th of February, and it hasn't flipped since. We may continue to see a nice bullish run. And I also wanted to mention the EMAs. The 50 did cross the 200, and this was more towards the middle of February, but since right around that point, it actually pulled back. And in a previous video, I was mentioning to you guys, watch the 50 and the 200, make sure we don't cross back to the downside. And sure enough, we did not do that. We actually bounced. It was very briefly, right around 20,000, and we popped right back up. This is very good, because we're likely not to see a flip of those EMAs, at least just yet. And another thing I wanted to mention is we were on this ascending line for quite a while here, ever since the beginning of the year actually. And once we broke that, we definitely had some bearishness going on. We definitely pulled quite a bit, you know, from right around 25,000 all the way down to 20. We briefly went under 20, but now that we're bouncing right over 20, back towards 24,000, it's funny that we're finding this as a resistance point. So keep an eye on that. I personally think if we can break out of this resistance, we are easily going to break past that 25.2 area. And that's what we really need to actually see a huge breakout, a push towards 30,000. Now, on a huge run like this, I would be cautious. We could, of course, have a little bit of a pullback before we push higher. This could be a false rally, and we could even come down under 20,000 for a little bit longer. But at this point, I'm not scared at all. I'm going to continue dollar cost averaging. I think that's the best route to take. It puts a lot of the guesswork out of it. You don't have to worry as much. You just simply dollar cost average and set it and forget it. But this has been a very interesting day so far we're having. We are starting to see a little bit of a cool down here. Bitcoin is starting to pull a bit, but we are still up massively today. One of the best days that I've seen in a while for Bitcoin, actually. And crypto as a whole is doing quite all right today. But I'll be very cautious. Things could just as easily start pulling back, but in my eyes, things look pretty good on the chart. And as we know, as the days tick by, we're getting closer and closer to the next halving. We are nearly only a year away. But thanks for watching, guys. I might hit you with another video in a little bit here. Consider checking out the links down below. Consider subscribing if you haven't already. Make sure you like. I definitely appreciate you. And I'll see you later.